Hi guys, it's Stock Curry, and today I've got an update for you on AMC. I also have 15 stocks for you to get on your watch list. But watch out, because I've also got more signs that September could be a major market correction. So let's get into it! Okay, first for our market news. There are mounting risks that point to September having a major market correction. First of all, the spread of the Delta variant could be an issue if it slows down the economy. At the same time, the Fed is working to unwind its easy policies and to start tapering its bond buying, which will also cause stocks to go down. And combine that with the fact that we have not had a market correction in the S&P or Dow since October of last year, plus the fact that September is historically the worst month of the year for stocks, and all signs are pointing to a major market correction in September. Now, there's actually another sign that the market correction might be way worse than people are thinking and possibly even turn into a crash. By the way, the difference between a market correction and a market crash: a market correction is a drop of 10 to 20% in the indices, and a market crash is a drop of more than 20% in the indices. And like I said, in the S&P and the Dow, neither one of those has dropped more than 10% since October of last year. Now, what I'm really looking at here is the fact that the S&P Case-Shiller Index rose a staggering 19.1% year over year. That is the largest increase in the series history, going all the way back to 1987. And for those of you who weren't alive in 1987, let me just tell you what happened. It was the biggest stock market crash in the history of the US stock market. So we have the S&P Case-Shiller Index at its highest level since 1987, and 1987 was the largest market crash in US history. Combine that with the fact that the PE ratios are at their highest level since 1999 and 2000, when the NASDAQ dropped 50%, and all signs are pointing to a major market correction and possibly a market crash in September of this year. All right, I want to be clear that I'm not saying these things to alarm you. I'm not saying these things to just clickbait and get views and all this stuff. I'm saying these things to prepare you. I want you to be prepared for a market correction, possibly a market crash, that is most likely going to happen in September, which, by the way, hello, it's September 1st, we're here. So probably by the middle of September, we are going to start experiencing this market correction or possibly market crash. So I say these things to prepare you. So how can you get prepared? A couple of things you can do. One, you can start selling some of your higher risk plays. These are stocks that have run up a ton, and you might want to start taking profits. Another thing that you can do is you can start loading up on cash. So rather than just jumping in and buying a bunch of stocks right now, maybe just hold cash on the sidelines so that you can buy the dips in October. Another thing that you can consider doing is buying hedges. Hedges could be things like UVXY and VXX. Both of those are volatility ETFs, and what they do is they go up when the stock markets overall go down. Another thing you could look into are inverse ETFs on the S&P and NASDAQ, such as SQQQ for the NASDAQ and SPXU for the S&P. Both of those will go up if the NASDAQ or S&P go down. Another thing you could consider would be put options on the S&P, NASDAQ, and Dow. So those are all different ways that you can prepare for a market correction. Personally, what am I doing? I am going to be selling some of my stocks and then just holding cash. I am a lot of options and stocks I've got that I buy, because what ends up happening ultimately is right before we get a market correction, the stocks just go parabolic. You just see all kinds of stocks running up way above where they should be, and you get these major rises. And so that's why I jumped into a bunch of call options in the last couple of weeks, and I bought a bunch of these stocks in the last few weeks. I'm just trying to catch that last final hoorah before we get a market correction. But over the next 2 weeks, I'm going to start closing out those positions and just holding on to cash, because I do expect a big drop in the markets. The only problem is it's almost impossible to time a market correction. So I may or may not be doing put options or hedges. I don't know. By loading up on a bunch of cash, I'm just hoping I won't have to hedge because I won't have really anything to hedge against. I'm just going to have cash. Another thing you can consider is take the cash that you save up by not buying stocks and put it into crypto. Gold would be another way you might want to go. So gold and crypto are considered safe havens. They're considered stores of value. And so a lot of people will take their money out of stocks and they'll put it into gold and crypto so that their money can stay at a good pace and possibly even rise during a market correction. So those are all different ways that you can profit during a market correction. Okay, I've got 15 stocks for you guys today, as well as an update on AMC. So let's get into those. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks on YouTube. Every single day, I watch hours and hours and hours of YouTube videos, and then I consolidate all of the stock picks from the top YouTubers, and I put them together into a single video. I give you both the cliff notes on their stock picks as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into our stock picks, I just want to remind everyone that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use in my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull is going to send you 2 free stocks worth up to $2,300. Okay, a quick look at the futures. I can see that the futures are all up right now. I can also see that the Asian markets are up, and I'm very happy to see the Chinese market up 2.83% right now. That should mean a great day for stocks on Wednesday, especially the Chinese stocks. All right, let's get into today's stock picks. All right, first up is AMC, and this is AMC Movie Theaters. It's been a while since we talked about AMC, so let me give you an update. AMC has been maintaining its bullish run. Ever since AMC hit the SEC regulation SHO list and failures to deliver were forced to be closed, AMC has been running up. AMC is now approaching the resistance level of $49 again. If AMC can break out above $49, it should continue running higher. Technically, it looks like it could do that this week. But I would not be surprised to see some short seller and market attacks later this week to push the price back down to either $40 or $45. We'll just have to see if the buying pressure from large institutions is large enough to overcome the selling pressure from hedge funds and market makers. Now, the reason I haven't mentioned AMC lately is because there really hasn't been any news. I generally only mention stocks when another YouTuber gives it as a stock pick or there is news. And while other YouTubers such as Keenan Grace and Zip Trader have been talking about AMC, they haven't provided any new insight or information that I haven't already covered on this channel. And that is true with a lot of the plays that you've been asking me to give updates on. Sometimes you just need to be patient and not look at your stocks every 5 minutes. Give them more than a day or two to do their thing. On that note, when I make a post on Twitter or Facebook that I bought an option for October or December or something like that, that is clearly a swing trade. It doesn't make sense to come back to me the next day and ask if I'm still holding. Yeah, of course I'm holding. So please be patient and give your plays time to work out. By the way, if you want to know everything I buy and sell, I post all of my trades within minutes of making the trade on Facebook and Twitter. You can follow me on Facebook and Twitter at Real Scott Curry. Now, speaking of patience, we still need to be patient with AMC. The short squeeze still has not happened. According to Ortex, AMC has a 93% utilization rate. We can verify that on Fintel, as we can see the number of shares left available to borrow are 150,000 as of the close of business on Tuesday. I also want to point out that Fintel ranks the AMC short squeeze potential at 76, putting AMC in the top 4% of all stocks for short squeeze potentials. Now, going back to Ortex and taking a look at this yellow line on the chart, we can see how the utilization is rising. That means more shares are being shorted. Now, there's still a lot of work to do before AMC might short squeeze. The average days on loan is 55, which means the average price hedge fund shorted AMC at was around $50. So you can see why $49 is such a strong level of resistance. Anything above that and shorts will start to lose money on their positions. That's why $49 is such a key level in AMC. Until AMC can break out above $49, short sellers will still be profitable. Once AMC breaks out above $50, short sellers will start to lose money and they will be more inclined to start covering their positions. So right now, that $49 level is key. And like I said, it looks like AMC might be able to break out above it. We'll just have to see how much selling pressure we get from hedge funds and market makers when the price of AMC gets close again over the next couple of days. Next up is BABA. This is Alibaba, and they're the Chinese version of Amazon. Yesterday, we heard from Tom Nash and Jeremy with Financial Education about the risks with BABA. They both said they would not be buying BABA, but did acknowledge that if you don't mind the risks, then BABA is very cheap right now and is severely oversold. Stockmo is willing to take the risks, and he loves the price of BABA right now. Stockmo did acknowledge that BABA could continue to drop lower. Stockmo is willing to hold BABA down to $140. He does think the upside potential is much larger than the downside potential though. ZipTrader also pointed out how back in 2015 going into 2016, BABA was down 50% due to China FUD back then. And then it rebounded and reached new all-time highs. We're seeing the exact same thing right now, with BABA down 50% due to China FUD. ZipTrader said history is repeating itself, and the best time to buy is during peak fear, which we have right now. Next up is BBIG. This is Vinco Ventures. Chris Sain said not to chase BBIG. It's hard to say where BBIG will go from here, but one thing Chris Sain did say was to know your exit plan. And that is absolutely true with any play. If you are currently holding BBIG, decide at what price you are going to sell and take profits, and also what price you are going to sell if it drops too low. I can't give you those prices. Since there's nothing fundamental or technical about the current run-up, I can't do any analysis or make any predictions. So just make sure you set your sell prices so that you can get out of this play and don't end up bag holding it for the next 6 months hoping it gets back to $10 again. The one thing I will say that is good about BBIG is that ZipTrader pointed out that some large orders have been coming in. That points to large institutions who have joined retail traders in trying to make this short squeeze happen. So that will help BBIG lean more on the side of going up rather than going down in the short term. The other good news, technically, is that BBIG filled the gap today. And filling the gap is a really important technical thing that needs to happen. It eliminates a lot of the downside pressure on the stock price. Next up is CHPT. This is ChargePoint. They're the largest charging station company in North America with 73% of the total market share. They are also starting to expand globally. I just wanted to give a correction from yesterday's video. CHPT is actually reporting earnings on Wednesday after the close, not Tuesday. I still expect CHPT to rise in price after earnings, and ZipTrader reiterated his $40 price target on CHPT. Chris Sain also gave a $35 to $40 year-end price target on CHPT. Next up is CRSR. This is Corsair Gaming. They're a hardware manufacturer for computer-based gaming and game streaming. Jeremy with Financial Education said he has been investing heavily in CRSR and he plans to continue adding on to his position in September. Jeremy loves the upside potential in CRSR. He thinks the stock is undervalued right now. CRSR has a forward PE ratio of 16 and a price to sales ratio of 1.3. They are growing revenue by about 200% per year. The stock is down because analysts expect CRSR's growth to slow next year. But given the low PE ratio, it actually does appear to be too low right now. This is a great value stock that could make a good long-term hold. Technically, the chart is short-term bullish and is recovering nicely from the oversold state that it was in a few weeks ago. Jeremy with Financial Education owns a lot of shares of CRSR, and he's considering adding some LEAP 2023 call options. Next up is DKNG. This is DraftKings. They're an online sports betting company. Stockmo said he will continue to load up on DKNG. He likes how they are expanding and acquiring other companies. Stockmo thinks DKNG will be the largest online gaming company that is tradable. DKNG has been quite bullish for the past month, but is hitting resistance here at $60. It's forming an ascending triangle pattern, which is bullish. So if DKNG breaks out above $60, it should continue going higher. On the other hand, we do have the RSI at nearly overbought, which points to DKNG topping out here and pulling back a little before continuing higher. So we'll have to see what happens in the short term. In the long term, I agree with Stockmo that DKNG should perform well. Stockmo gave an $80 year-end price target on DKNG. Next up is HNST. This is Honest Company. They're an ethical consumer goods company founded by Jessica Alba. HNST is down over 50% from its IPO back in May. Jeremy with Financial Education thinks HNST will profit in 2022, even though most analysts think they won't turn a profit until 2023. HNST is growing by about 40% per year. Technically, HNST has bottomed out and has shown confirmation of a rebound. The MACD just had a golden cross and the RSI is no longer oversold. The only technical that has not shown confirmation yet are the EMAs. The candles are still below all of the EMAs. But once the candles start closing above the 10-day EMAs, it will have full confirmation of a rebound. Jeremy with Financial Education has started dollar cost averaging into HNST. And next up is JD. This is JD.com. Stockmo said he added a substantial amount of JD last week. One reason is because JD is beat up and the price is quite low with the low PE ratio. He also liked the fact that ARK Invest started buying JD again. Next up is LCID. This is Lucid Group, and they're an American EV manufacturer. Larry Jones talked about LCID on Tuesday. He explained how he owns quite a bit of LCID in his portfolio. He believes that while LCID will have volatility in the short term, that it will be a great stock to hold long term. And of course, LCID won't start really rising in price until they start deliveries. In the short term, LCID is very close to the 300-day EMA. The last time LCID dropped down this low, it bounced before hitting the 300-day EMA. I can also see that the candle on Tuesday was an inverse hammer, which is a technical sign of a reversal. If you look at the low back in May, the candle was also an inverse hammer as it bottomed out and started a rebound. Combine that with the fact that LCID is very close to oversold on the RSI, and all signs point to LCID having bottomed out here. I think there's a good chance that LCID will start going back up from here. I think now would be a great time to buy in, or if you're a little bit more risk adverse, you can wait a few days for confirmation of the rebound. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. Stockmo continues to add on to his NIO position. He knows that NIO is down due to the China FUD, and he understands staying out of Chinese stocks due to the risk. Stockmo is willing to take on that risk, and he will just continue buying NIO if it drops further. Shorter term, Chris Sain said that NIO is at a level of resistance, and we'll have to see if NIO can break above $40 or if it drops again. $40 is where the 200-day EMA is at. If NIO can get above $40, and even better, if NIO can get above the 50-day EMA at $42, then it should be ready for another extended bull run. We are helped by the fact that the MACD just had a golden cross, but that's not a guarantee. We'll just have to watch NIO over the next couple of days to see if it can continue running higher or not. If you're waiting for full confirmation before buying in, I would buy in once NIO closes above $42. Next up is PLTR. This is Palantir, and they're a data analytics company. Chris Sain reminded us that PLTR continues running higher. In the short term, PLTR is approaching some strong resistance. The $27.50 level is strong resistance for PLTR. PLTR will also be at or near overbought at that point on the RSI. So there are quite a few signs the PLTR will bounce off of the $27.50 level and start going back down again. If this is a short-term trade for you, then you might want to consider taking profit soon. If this is a long-term trade, then ignore everything I just said. I would just keep holding PLTR if this were a long-term hold for me. Next up is SDC. This is Smile Direct Club, and they're a manufacturer of teeth straightening aligners. They are a direct competitor to Invisalign. Jeremy with financial education likes how SDC is down 65% from its 52-week high. SDC is expected to have a revenue acceleration over the next 2 years, which means they are expected to grow revenues faster and faster over the next 2 years. The downside is that SDC is still expected to have a net loss in 2022. For that reason, Jeremy is keeping his position in SDC low. Jeremy sees the potential in SDC, but he also sees a lot of risks in the need to continue raising capital as they continue to lose money. Now, technically, SDC has rebounded off of its oversold position that it was in a few weeks ago, and it has now turned bullish. The candles are above the 10-day EMA, and the RSI is rising, and the MACD is also bullish. So now would be a great time to buy into SDC if you are interested in this company. Next up is SPRT, and this is support.com. Chris Sain said that if SPRT gets back down to $26, then it's done. He's basing that upon the technicals. If SPRT drops below $26, then it's going to fill the gap, which means it will quickly drop down to $20. At that point, it will have downward momentum and may continue dropping further. However, like we saw with BBIG, it might just fill the gap and then start going back up again. So who knows what's going to happen? You really can't look at this one at either a technical or fundamental basis because this is really a short squeeze play and it doesn't follow the technicals or the fundamentals. So it's a big gamble, but it could also make you a lot of money. I would call this a lotto play. And as you guys know, if you've been following me on Facebook and Twitter, I am perfectly comfortable jumping into lotto plays. I currently have a lotto play on XOS and another lotto play on RIDE. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. Stockmo said he would be buying more TSLA soon. He feels like TSLA is underpriced, and he reiterated his $900 year-end price target. I personally feel like TSLA is right where it should be. If you're thinking about buying more TSLA, I would actually wait for it to drop down closer to $700 first. Now, Larry Jones talked about the long-term outlook for TSLA. He mentioned how TSLA just filed to become an electricity provider in Texas. Larry stressed that TSLA is not a car company. They are a technology company that manufactures cars. Larry Jones thinks TSLA would make a great pillar in your portfolio. He thinks this is a great large cap stock to own long term to give your portfolio growth and stability. I would agree with that. TSLA is showing great long-term steady growth. There are certainly other companies out there with lower PE ratios that are better value plays, but amongst the growth stocks, TSLA is hard to beat. Next up is TTCF. This is Tattooed Chef. They are a plant-based foods company. Jeremy with financial education let us know that Wall Street Bets has been talking about TTCF. And yes, my username is Most Retarded Honest. I have been a member of Wall Street Bets since it was only 200,000 members, and now they've got over 10 million. Now, someone at Wall Street Bets put out some DD on TTCF. They went through a lot of information using the Bloomberg terminal for institutional data, Ortex for short interest data, and Interactive Brokers for the borrow rates. If you want access to the same tools, on my resources page, I have links for Interactive Brokers and Ortex. Now for institutional ownership, I use Fintel since I don't have access to a Bloomberg terminal. So if you want access to all of those, you can check out my resources page. Now regarding what Wall Street Bets found, essentially they found out that TTCF is a heavily shorted stock. I talked about that in an earlier video that I uploaded last week. And now it looks like TTCF has showed up on the SEC Regulation SHO list. You might remember how when AMC showed up on that list, the stock started to go up on a new rally as failure to delivers were forced to be closed out. Now that TTCF is on that list, we are also starting to see a rally in TTCF. If you want to know more, I encourage you to go read the Wall Street Bets Reddit post called "The Clock Won't Stop." Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite way to make money during a market correction is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $100, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident, or if you like to trade OTC penny stocks, or if you just don't like payment for order flow and you don't mind paying to trade, then I recommend Interactive Brokers. Interactive Brokers is a great trading platform. They have highly discounted trading throughout the United States and the rest of the world. And both Webull and Interactive Brokers, they both give you the full pre-market and after hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do have material connections with both of those, so whenever you sign up for either broker, not only are you going to get a great broker to trade with, you're also going to help me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. And if you're on YouTube, go ahead and click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.